To briefly introduce myself, I am Thierry Morin. I am French, but now based in Norway. And I'm a director within Capgemini Invent, the digital strategy and consulting branch of the Capgemini Group, leading our payment team and offerings. So I will present you the main insights from a global market research we jointly did with LexisNexis Risk Solutions on the evolution of digital corporate payments. So first, let me start by giving you a little bit more information about the methodology. So we have conducted this market research between January and March 2022, and we have built the main insights from the report using mostly two sources. First one was an online survey collecting inputs from 400 payment managers from large and international corporates covering Europe, North America, Asia, Australia, and Middle East, and also covering the most important industries such as retail, automotive, oil and gas, chemicals, shipping, manufacturing, and technology. In addition, we had direct interviews of around 15 payment executives of large international corporates to discuss current status of corporate payments, what is working well, what could be improved, where we see the market heading, and what are the key priorities for 2022. So, what are the main findings of the report? So the first message is that corporate digital payments have continued a significant growth over the last years, fueled in particular by the accelerated rate of corporations going digital during the pandemic and by the ongoing standardization of international payments. So corporate digital payments represent now 133 billion transactions globally, 13% of the total non-cash payments, which we estimate at around 1 trillion transactions per year, where North America and Europe are the two largest regions, representing 60% of the volume. In terms of growth, while we see retail payments are still driving the growth of the digital payment market, with 19% CAGR over the next three years, we forecast annual growth of 10% for corporate payments, reaching 200 billion transactions by 2025. Not surprisingly, our research shows that account-to-account payments are the most preferred choice of corporates to process payments. More than half of both account payables and account receivables are already processed via account-to-account payment solutions. But at the same time, it means that 50% of account payable and account receivables are still not handled in a fully digital way. So why the corporates are using account-to-account payments? So as you can see on this slide, the main benefits of using account-to-account payments for corporates are coming from the higher security, a lower failure rate, and reduced costs. Additionally, most corporates see account-to-account payments as standardized, easy to automate, more efficient, and carrying richer transactional data, which enables to ease payment reconciliation and tracking. However, the potential for improvement is still high, and even though the increased level of automation and standardization has helped corporates to reduce manual work and late payments over the last few years, we still see a lot of improvement potential. So there are still too many manual interventions for reconciliation of payment flows, either due to a lack of interoperability, data quality, or specific payment reference data needed in certain countries, for example, to be compliant with local regulations. In addition, the potential to increase the straight-through processing rate, which is around 30 and 40% on average today, is still important, especially if you look at international payments, where there are still a lot of frictions. International payments, they still take a long time, and they are expensive, especially if they involve many different banks. Businesses are, however, addressing these issues by leveraging new technologies, using, for example, more advanced middleware solutions, embedding automatic data verification tool, for example, and by improving the standardization among vendors and clients. They are also looking at value-added services to improve their payment operations, And more than 40% of corporates already use, for example, virtual account management or procure-to-pay solutions on top of their account-to-account payment to ease and automate payment reconciliations. Instant payments are also quickly developing in mature markets, representing, for example, already 20% of corporate payments in the UK. But I will come back to this in a few minutes. First, I would like to deep dive a little bit more into the different dimensions. And the first one is regarding the failed payments. So on average, our survey reveals a high level of not completed payments of 8% as a global average. This figure includes all payments that have not been processed as expected, late payments, cancelled payments, reverse payments, and not only the failed payments due to technical issues. But still, it's a quite significant number and important issue for corporates. And indeed, in corporate finance and in business in general, repetitive business processes are today generally efficient and streamlined. But there is one common area where these automated mass processes fail is when something that should not happen happens. And how do these manual processes work when companies are facing the unexpected? For most businesses, well, these processes are still failing to some extent. So the key is not only to reduce the share of failed payments, but also to improve all the processes to handle them. Now, if we look at the most common issues generating failed payments, you can see that the two main reasons are SWIFT or National Clearing Code error for 41% of our respondents, and on number two, beneficiary details error for 36% of our respondents. In addition to these technical validation errors, we see also several other issues generating failed payments. For example, issues with batch payments, requiring to reduce the whole batch, issues with data quality or lacking payment data references, not standardized and the paper invoices, hierarchical and not automated payment approval processes, local specificities, local regulations, and finally, master data with complex mapping of codes from bank systems to corporate middleware systems. If we move on to another dimension, is the regional differences. So as payments are more and more globalized, we did not see huge differences across regions, but still several key points should be highlighted. So Europe is the most advanced region where account-to-account payments are already the standard way of exchanging value among corporates. In North America, so we have Canada, which has around the same digital maturity level as Europe. And in parallel, we have the US, which are a little bit lagging behind with a high share of checks and non-digital payments still in use, even though the pandemic has significantly accelerated the shift toward digital payment solutions. For example, if we look at the top three priorities in each region, US is the only region which has put payment execution among the top three priorities for payment executives. Asia has a very scattered landscape, I would say, with very advanced payment markets, for example, Singapore, Hong Kong, China, for some dimensions, and other countries where cash and non-digital payments are still very important, for example, Vietnam, Cambodia, and Indonesia. And you will deep dive a little bit more into this during the discussion. In Middle East, account-to-account payments are the norm, and usually with very modern and efficient payment infrastructures. If we move on now to innovation. So what we can say is, historically, corporates have been quite conservative when it came to payment innovation, but have seen a clear uptake of value-added services adoption in the last years. So today, more than 40% of corporates already use virtual IBAN, virtual account management, or procure-to-pay solutions on top of their account-to-account payments to ease and automate payment reconciliations. More advanced middleware solutions embedding automatic data verification tools are becoming much more standard, And, payment as a service, everything on the cloud, automation, real-time data are all very important topics for corporates. But at the same time, we see some innovations that have not been as successful as expected and on the corporate segment. So the first one is instant payments. So as I mentioned, it's a success in the UK with 20% of the volumes, but still we have not seen a big uptake of instant payments globally. Whereas, instant payments, they have a lot of advantages for corporates. Of course, you have the speed that enable to gain in working capital positions by reducing payment processing time. And this could mean significant amount of money, which is quite important for corporates. But still, despite the surge in the consumer space over recent years of instant payments, many corporates are yet to embrace this trend. And our research highlights that there is no strong push for instant payments from vendors, as most of the discussions are dealing with payment terms and not really about the type of transactions. And in addition, there are still some issues regarding the interoperability among regions. However, the new solutions leveraging request to pay and the evolving regulation in Europe, notably, could be a game changer. Second innovation that has not been so successful as of today is open banking. And we see that only 12% of businesses see open banking as a strong opportunity to improve payment solution and processes in 2022. And this could be explained by several things, but by the lack of standardization, for example, on API structure, leading to multiple interfaces you need to update regularly. And in that regard, the standardization provided by Swift is quite valuable. Finally, if we look a little bit beyond 2022 and look at new technologies, we see blockchain and smart contracts as important potential solutions for corporates. But still, we do not see large-scale adoptions unfolding within the coming years, as the field remains relatively unexplored by corporations. Now, I would like to move to the next dimension, which is the key priorities for corporates and payment executives going forward. So payments, automation and digitalization are still strong priorities for payment executives in 2022, and nearly 60% of corporates rate digital transformation as a key priority for this year. Key corporate objectives are to increase the share of digital payments, widen automation, and develop new services to further integrate with vendors and clients. So a full end-to-end payment automation, covering the whole process and not only the pure payment processing part, it's still a target objective for most corporates, as this requires all vendors and clients to have advanced and interoperable payment solutions. Another big trend for corporates going forward is to continue the development of payment factories, enabling to consolidate all payment flows from the different subsidiaries into the same hub. And the ongoing consolidation of supply chain in mature markets is also contributing to this effort, coupled with the further integration of payments into the whole procurement process. For advanced corporates, where most of payment operations are already automated, the stake is to go even further on end-to-end integration with vendors. They're also looking at migrating more services into the cloud with new development of ERP systems, including, for example, procurement, invoicing, payment approval, reconciliation, and reporting. And finally, some of the most tech-savvy corporates have also stated that an objective is to leverage more artificial intelligence and data visualization to improve their business performance. For example, robotic process automation or anticipation of customer issues, analysis of weak signals using data. Developing state-of-the-art payment solutions are, however, very expensive for corporates and difficult to break even, as demand from vendors and clients are often limited to core payment functionalities. And in that context, leveraging third-party capabilities is key to accelerate development and optimize required investments. And in that regard, our survey shows that cost efficiency, simplicity, and customer support are the main criteria to select a business partner for payment solutions. So to conclude, I would say that we are now at a tipping point. So while corporates have historically been primarily searching for simplicity and cost efficiency, they are now looking at more advanced and value-added payment solutions fostered by the rapid development of new technologies and the necessity to go fully digital during the pandemic. So best-in-class corporates are already fully embracing new digital payment ecosystems, leveraging cloud payment platforms, real-time data management, and end-to-end integration, increasing the gap with the rest of the market. And in that context, we think that 2022 will be key for payment executives to prioritize the right investments and set up a forward-looking payment platform, addressing the ongoing market developments and evolving vendor and client expectations. Many thanks for your attention.
Okay, thanks everyone, and thanks virtually to Capgemini for the summary of the report, which will be distributed to all the attendees after today's session. I'd also like to thank our panelists, David, Alexis, and Sal, for taking the time to join the discussion and share their real-world expertise today. Alexis is the Regional Finance Director for Reckitt. Reckitt is a top 25 company on the London Stock Exchange with a history of spanning over 200 years. There's probably nobody who's on this call today who hasn't used a Reckitt healthcare and or Reckitt cleaning product in their lives. Sales with TreviPay, who provide a global B2B payments and invoicing network that covers both B2B accounts payable and accounts receivable. And David works in the risk solutions business of LexisNexis, which is a global business, and they're also the sponsors of the Capgemini Corporate Payments Research that we just heard the summary for. I'd like to start with David. David, LexisNexis is very well known for its legal and risk businesses. Can you tell us a little bit about LexisNexis and payments?
Sure. Thank you, David. Thanks for having me. Just a very quick introduction of LexisNexis Risk Solution. Right. Coming back to the topic of LexisNexis Risk Solutions, we are part of the RELX Group, and with our merger with Acuity, we have expanded our solution portfolio and now offering the payments efficiencies solutions. So as the name suggests, other than providing risk solutions to mitigate compliance risks, fraud risks, and so on, the payments efficiency solution is another suite of products that has come into demand, mainly because of the digital transformation of global businesses. Right? Because the businesses will have to accept more and faster payments through different channels. So there's a need from our customers for safer, cheaper, and faster payment processing. And at the same time, the customers, the users' experience is very important as well. We live in a very fast-paced generation. So there's a very small window of understanding of when any issues or glitch happens, we will need to fix it very quickly. So that is a very quick introduction of the company as well as the solutions we would like to discuss for today's panel.
Thanks, David. And is there a specific circumstance or client situation that was the catalyst for LexisNexis commissioning the study that we've just seen the summary of in Capgemini?
Yes, there is. So just based on the global research that we have seen earlier on, we have found that 60% of the payments processing were not fully straight-through processing, meaning to say there are some elements of human intervention, perhaps for enriching information, perhaps to resolve errors that's resulted from the processing. And we have also seen during the presentation, this is because of incorrect SWIFT BIC codes or national clearing codes. And when it comes to account payments, we will need to have the information ready for the beneficiary, for the bank account information, what is the routing path. And in this process, we will also need to understand, is there any sanctions entity involved, right? If it's a sanctions bank or a person, you should be stopping the payments before even being sent it out to the beneficiary, right? So these are more of a few of the examples of motivations where we see the need for payments efficiencies, solutions, and data points to help our corporates in this space.
That's a very interesting number, that that 60% of payments processing is not straight through and involves some sort of manual intervention. Just to elaborate on that, David, is there a mix in there between manual intervention, which is required because that is the process, versus manual intervention because there's a payment failure?
Yes, there is a mix. So in terms of payment failures, depending on the definition, because at the moment we are relying a lot on the systems to process these payments automatically, right? So when systems fail or some errors resulting from systems, it's mainly because of the bank information that is not up to date. Okay, some examples could be there's a bank merger, so there's a change in like the headquarter address, right? If there is the different hops between systems. Okay, take an example of payments traveling through domestic to international, and then later on to another domestic systems. Going through all these systems, the message itself, the information may differ, right, depending on where it's going. So if this information is not up to date and we let it run automatically, we may run into system errors, right? And that also brings us to the next point of the need for human intervention. So if there is a case where the users or the payment operations, they need to resolve this information quickly, they will need to understand what is the error message that may pop up, right? It doesn't make sense where the system said error for a normal user, payments user, they will not have to understand what is it. So the error message has to be very intuitive, user-friendly, and allows them to rectify the problems quickly.
Thank you. Alexis, Reckitt is a global company operating in many countries in Asia Pacific, starting with that. But how does Reckitt organise itself for corporate B2B payments? Sorry, Alexis, I think you might be on mute.
So this is Camilla again. It seems like we are followed by some issues today. I don't think I can fix this one because I can't see anything on my screen. So maybe, Alexis, could you just dial in and out again? And we just go to Sal with the next question for time being. But hold that thought, everybody. We'll come back to Alexis in a second. Do you want to try that, Alexis? Is that okay? You can text me on the side.
Thanks, Camilla. Sal, you're on. So I think that many people, rightly or wrongly, on this call have not heard of TreviPay. Do you want to just tell us a little bit more about how you guys fit into corporate payments and the adoption of initiatives such as Procure to Pay and instant payments and things like that?
I was muted. TreviPay are exclusively a B2B payments business service provider. So everything that we do is to try and simplify or reduce the complexity for merchants to be able to do business with other businesses. In terms of P2P, it's all about controlling cost control, internal cost controls for organizations, increasing efficiencies, reducing complexities in their business as well. So what we do is we not only provide a trade credit program, so provide terms to buyers in order for them to be able to do business, but we also have created a platform that enables those P2P or controls that an organisation may have in place to be met with our technology. So that would include having automated payments processes that occur where there's a great deal of customization that can take place that the buyer can establish and set up. So control the details around purchase orders that are included, control hierarchies, internal authorizations, different credit limits, etc. So we've been able to create a program that enables that. I'm getting a little bit of feedback. There we go. So yes, so we do a number of things, but effectively we offer a white label trade credit solution. But the big value add there is in the capability to meet the needs of organisations or corporate businesses that must meet their own internal controls and P2P processes as well.
So you're talking about corporate payables and also corporate receivables.
Exactly. So our platform, we do lending, so we provide terms, which are the opposite of real-time payments to some extent, but we can support real-time payments for merchants, which we can talk about a bit later. But basically, from an accounts payables perspective and accounts receivables perspective, we enable those seamless integrations to take place with automated invoicing processes, and from a P2P perspective, enable all of those internal controls that are set up by an organisation to be met or adhered to, which is basically what we do.
Thanks, Sal. Alexis, can we come back to the question of how Reckitt organises itself for B2B, making B2B payments and receiving them?
Yeah, sure. Can you hear me now?
Yes.
Excellent. Look, we traditionally actually run through normally via banks and EFT transactions. And one of the things that, I'm often approached to is to join kind of new payment platforms regionally. But if you're kind of sitting in a multinational, the kind of conflict is that, and I don't think Reckitt would be very different from most other multinationals, is that all those kind of decision making about what kind of payment platforms you go onto, or whether it's drawing down accounts receivable invoices earlier, or vendor kind of financing through AP kind of platforms, actually gets made in corporate, so wherever your kind of headquarters are. And the reason why that happens is because they don't want every single country taking kind of decisions on cash flows and payment flows, and also on the security around them. Often there's conversations about, we need to be careful with our kind of, payment kind of structures, and because they don't want debt covenants up in headquarters to be jeopardised by what we're doing all down in the small countries. So I just think it's kind of, I guess the evolution needs to be probably, at the corporate level, and less at kind of the subsidiary multinational level.
So how does that centralised model cater effectively for the differences from country to country?
Look, I think it's, in a way, you kind of all individually come across things and then you ask for approval. I know it sounds a bit archaic, and then you're told one by one, yes or no. And so that's how things are catered for. But I imagine, just from an electronic point of view, that pretty much, especially if you're in the FMCG game, a lot of the payments these days across Asia, are no longer kind of in cash or check.
And just picking up again on that point that David made earlier about 60% of payments processing is not straight through and involves manual intervention. Do you have any visibility of that happening within Reckitt?
Look, I don't, but I do know we do have circumstances, and what it actually comes back to is data. Especially on ERP systems, your master data you live and die by. The shame is that it shouldn't get to your payment platform and then it errors. It should error a long way before then. But just like, I guess, any transaction, when you've got end-to-end kind of processing, whether it is, manufacturing a gadget or selling to somebody, data is at the key for that transaction to be successful.
It's kind of a shame we don't have Neil from Woolworths online, because I would imagine they're a fairly large customer of yours. So there'd be plenty of payments flowing between the organisations.
Yep, actually they're our number one customer. So
Right. Okay. David, what do you consider best practice when it comes to corporate payment operations in Asia Pacific?
Well, obviously across Asia Pacific is a huge geography, and then when we talk about payments, broadly speaking, there are some businesses that focus on the domestic business, domestic payments, and there are multinational corporates, right? We need to make the payments across borders. So obviously for those multinational corporates, they have a more complex challenge. The one that any layman would be understanding is for bank transfers, on some days there will be bank holidays, right? So you have to build in the lead time or delays when you're making the payments if the bank on the other side of the border is closed, right? And also, especially in countries like Japan or China, so these markets, they operate in the local languages. So all the information from payments to bank information to beneficiary could be just in the local language. So if you are transferring money to and fro Australia, for example, you will need to build in that multi-language support. Obviously, when we talk about SWIFT bits, national clearing codes, so these are numbers, right, and codes, but you will need to be understanding the address. That's the basic level of whether this is the right payments to go to. Any other beneficial information that's in local languages, you need to verify, just to have more preventive measures, right? When you send out the payments, it is going to the right person or the right business.
You mentioned the differences between different countries, but the best practices also differ based on the type of business?
Yes, definitely. So the type of business. So there will be, broadly speaking, businesses to making B2B payments or B2C payments, right? So there will be corporate payments, there will be retail payments, and then there will be being put together in the message, in the payment message, when fill in different fields in the payment message and the routing information. So all this will need to be prepared. As Alexis had mentioned, data is very, very important. So you have to get it right. If not, anything goes wrong, the bank may just reject this payment, right?
Sal, David mentioned about an example there with bank holidays, but do you have clients and prospects who are concerned about payment systems where they're affected by bank holidays, but they're also affected by weekends? They're affected by a transaction being processed after 6 p.m. on a weekday evening. Is that an issue? I mean, is there now an expectation that if transactions are electronic, well, computers don't need to go to sleep?
Yeah, that's a good point. Look, I think that's a good question. I don't think that that's probably not the primary concern that we get when we're having conversations with our clients and our prospects. I mean, across Asia Pacific, there are over 30, regulatory bodies that are governing the regulatory requirements of a particular country with regards to payments. So there's navigating that, which is quite complex. You need to have an organisation needs to have a number of payment methods in place so that there's some compatibility with the country that you're trying to send a payment to or receive a payment from. So I think ultimately, best practice comes down to being able to partner, knowing as an enterprise, knowing that, what those regulations and requirements are, or being able to partner with a third party who can do that for you and reduce that complexity for you. Really what we get is we want the clients want that to be solved, which is what we want to do. And I think best practice depends on the size of the organization as well. To your point before, large enterprises have P2P processes that they need to meet. Smaller organizations have cash flow demands that they need to meet. So really, even when you're thinking cross-border, there's some common challenges and needs that organizations of different sizes will have that need to be solved, as simply as possible.
So would you say for corporate payments, there's less of a demand for instant payments compared to a demand for the fact that a payment has been made and that settlement is guaranteed?
Yeah, so that's a great point. For us, we see less of a demand for that. 60 to 70% of corporate payments are still, or corporate payments are based on terms. So paying later. So I think there's less of for B2B, there's less of an emphasis on real-time payments, and as you say, more of an emphasis on being able to have time to pay, so pay later, or generally on an invoice. For most B2B organizations, they need to meet whatever controls are in place, and usually that involves an invoice, and also that for a merchant who needs to receive payment, in terms of maintaining or being able to manage their cash flow, is settlement, is the amount of time for settlement. So that's an issue that we're regularly solving for our client merchants that we work with.
Alexis, are there important initiatives that an organisation like Reckitt can undertake to give you the potential to be able to take advantage of innovations in payments? I mean, is there some kind of, taking your centralisation example, are there further steps that may be being undertaken or need to be undertaken to make things work better?
Look, I think there's a couple of things. Certainly, in the Reckitt example, locally, we're all responsible for net working capital and the net working capital results. Is it being, how do I say it, the efficiency, is it being allowed or being enabled on the system side? Not yet for us, because the corporation is really focusing on rolling out globally an SAP ERP system. And once we're on that platform globally, I think all the add-ons will come. And the IT investment is more on that side first, and then we'll look at add-ons to enable that. Having said that, locally, within kind of, a framework, we are looking at what we can do, or what terms we sign with, both customers but also suppliers, to ensure that we are efficient in our cash cycles. So, but I think if I'm just talking on behalf of the FMCGs, it all depends on where they are in the maturity of their ERP system rollouts, and if the focus of the investment is there first, and then comes kind of periphery kind of pieces that speed up things like payments or procure to pay. And other platforms.
And for a multinational, is where you have a centralized model, but you have to deal with local regulations. You're saying before it is the responsibility of the local management to ensure that headquarters for payments at least know what regulations need to be met, and I suppose potentially the process is put into the payment. So that's up to the local management to do that?
Yeah, absolutely. Absolutely. But what kind of frameworks or platforms go on and what that means from a kind of a, corporate kind of balance sheet structure point of view, that definitely is up in the centralised CHQ kind of model.
Right. And with respect to potentially the different sorts of business customers that you have and the different sorts of vendors that you might have to make payments to, is the complexity of the different requirements by type of business and type of supplier and type of customer a headache for someone in your organisation?
For us, I think it's pretty vanilla, right? We're dealing with people like Coles, Woolworths, Chemist Warehouse, and so forth. On the supply side, though, sometimes, yeah, when we're dealing with small manufacturers to kind of, large. Though, and the biggest question I think Sal mentioned before that everyone has is about the timing of payments and the payment terms. That's where the headache comes in, because that's more a commercial negotiation. But we certainly have, even when it comes down to local payroll, as we move more and more into kind of shared services kind of arrangements, will that shared service centre deliver, the payment run so that we actually pay people on time? So that's where, the question on payment times and cut-offs and all that kind of thing actually does come into conversations.
Sal, I'm going to repeat a question I asked David earlier, but what do you, TreviPay, consider best practice when it comes to corporate payment operations in Asia Pacific?
I would say, well, I think I mentioned it in passing before. It depends on the organisation. The size of the organisation may dictate what best practices for them. But definitely for us in servicing our customers, and to Alexis's point before around ERP, but best practice is moving towards being able to have like a seamless experience or a seamless process where you have some integrations into an ERP system, whether that's a direct integration or through an integration through APIs, but having that integration from the commerce platform from which you're purchasing from through to your the generation of those invoices, and then those invoices being able to flow into the ERP and reconciling into the ERP. That's fast becoming, I think, the standard of best practice for organizations of any size, and that's been a large part of the tech lift and the tech work that we've been doing over the few years at TreviPay, for example, to enable that, because that's been the biggest need that organizations have had to help speed up the process with which payments can be processed, is having those direct integrations into ERP systems on the buyer side, into the receiving side of the invoice.
So do you believe that a single platform can meet the different payments needs for accounts payable, accounts receivable, different jurisdictions, etc.? Yeah,
sure. I think it's tough if a corporate's trying to enable that themselves with their technology internally. I think that that there's a lot of vendors on the market so who can supply that service. TreviPay, for example, has a platform that directly integrates into the commerce platform and directly then integrates into the ERP system. Every businesses of different sizes have different needs, whether that's cash flow and working capital, and having fast settlement so they have that working capital, or whether it's having 30 or 60 or 90 days to pay and having a their accounts receivable process is simplified through enabling of that technology, then I think it is possible. And I think as time goes by, more and more work is being done, by organisations to have that seamless end-to-end account-to-account processes in place. So I think it can, and that's definitely where we're heading, and where I believe other vendors who are supplying those types of services to corporates are heading as well.
So David, would you agree with that, or do you have other examples? And are there situations where, to be best practice, you need to select multiple suppliers who are best in class in their specific area?
Yes, I would say this is the holy grail when you have one platform that will fit into different needs at different times. And we have to acknowledge this is a very, very challenging task, initiative for any corporates, any business. There are many things, many checks that we need to put in place. If we talk about from the payments perspective, we have mentioned the data need to be clean, the routing path information need to be prepared, and also the beneficiaries or the senders, these entities, we need to check if they are sanctioned or not. And this is happening in real time, right? So there'll be for large corporates, there can be thousands and thousands of payments that are being processed every day. So we need to really highlight the red flags and high risk to the payments users if there's a need for them to rectify the issues. So apart from these system integrations, we need to also bring in very good like algorithms, machine learning or matching engines to help filter out the noise before presenting the real risk to the users. And
we heard things from the Capgemini summary about the future, the use of artificial intelligence, the role of instant payments, and perhaps it wasn't touched upon there, but the use of blockchain in smart contracts and vendor finance. Alexis, do those things actually resonate with an organisation like yours, or is it more a case of, look, we just got to get these things to work and then we get on with doing what our core business is?
Yes. Sorry to be true, but look, I love about payments is like it's finance dirty work, right? So the key thing is that we're manufacturing and we're selling, and then we're collecting the cash on that. And that's why I think, until there's kind of a corporate kind of decision to be really leading edge, do you have multinationals like ourselves kind of, taking that charge forward? So.
And David, if we had this session again in 5 years' time, what do you think the big topic we'd be talking about would be? 5 years.
5 years. 5 years is a long time. I mean, we're in a very fast.
3 years.
All right. So I'm just banging on the really hot topic recently is on cryptocurrency, right? So it has gathered a lot of interest for good or bad reasons, but we are seeing the conversion between cryptocurrencies like Bitcoins with the standard or traditional payment systems like SWIFT, ISO 222, right? One is the really traditional financial system that's been around for 10, 20 years. The other crypto networks that's been mainly gathering interest or popularity in the last 2 to 3 years, right? So these two networks, there is an initiative, or we have people in the world have the vision for them to come together. How does it look like for retail customers or corporates? We do not know for sure. We're still in the molding phase, right? But essentially, all these assets, payments methods, because of the demand coming from the population, we will need to facilitate them. And if today I want to send money to you, David, or sell through Bitcoin, corporates, banks will need to facilitate that very quickly because of the customer need. If you're not able to do that, then consumers will be going to another service provider that can help them process their needs. So something to think about and look out in the next maybe 2 or 3 years.
I heard you say crypto. Sal, what do you think in 3 years we might be talking about?
The same thing, probably. Organizations are going to keep having the same challenges. No, I think look, crypto, all of those emerging AI, all of those emerging technologies, I definitely think there might be a conversation in 3 years about those. But I do believe that realistically, really large organizations have got a lot of processes and bureaucracy and red tape that they need to be able to cut through. And I think the real conversations we're having is about trying to simplify, that for them. I think that's probably realistically more than 10 years away when we start talking about some of those more advanced technologies. I feel like some of the more current pressing needs that come from enterprise or larger corporates will be the implementation or the expectation of e-invoicing similar to Europe, such as PayPal. I think that those types of things will become more of a pressing issue that need to be addressed and dealt with or adopted over the next 2 to 3 years in Australia and through APAC. I believe that there's rollouts of those types of e-invoicing requirements happening in Malaysia and Singapore already. So I think that's probably one of the next things that that organizations will need to be able to comply and deal with, and then it'll be just further creating great customer experience in the B2B space. And I think maybe after that there'll be more conversations about crypto and other payment types, etc. But at the moment there's more of a still grassroots need in the B2B space. I think experience is definitely going to be driven by B2C and what's happening in B2C, which drives technology or adoption of new payment methods in the market. But realistically, in that large org space, it's going to be continue to be more grassroots. Yeah.
Alexis, there has been a question submitted with respect to your comment about the organisation moving to SAP globally. Do you have a view, or is there any experience on how well a single platform can then integrate with different payment methods in different countries?
I'm sorry, I don't have experience, and that might be because of where we are in our ERP journey, and I haven't come across any in kind of my previous companies either. So.
Right. Okay. Oh yes, there's one question here, and it relates to crypto, but central bank digital currency. David, do you see that as just another version of crypto, or something that really does require a different approach?
Yeah, definitely a different approach. For the broader audience, our understanding of cryptocurrency like Bitcoins is more for retail purposes, consumer usage, right? For central bank digital currency, it is as the name suggests, central banks to clear out corporate payments, right? So this will be the main users will be coming from businesses. And because of the vast difference in the payments processing and the information coming from corporates versus individual, I will see there will be different needs. Definitely CDBC is around for a reason, and there's gaining a lot of government support as well. That is, we need another session to talk about the problems that the corporates are facing. But I would say that is a trend that we're seeing going forward. And for payments processing companies, solution providers like us, we'll definitely keep a lookout on how it develops and how we can support this process.
And Sal, I mean, I understand the responsibility that you and TreviPay have to approach clients and prospects with respect to how to do things more effectively. But with respect to your customers, what role do their banks play in innovating payments for the bank's client?
Sure. Look, I think it's an interesting question, because effectively what TreviPay do is do financing. So that, for the customers that we deal with are effectively using us as a managed service. And so really we're the organization who are coming to them with potential payments innovations and making sure that they've got the latest and most current payment methodologies and technology available to them. So as to David's point earlier, as we see a need or an opportunity to be able to introduce introduce new intelligence or payments technologies into the ecosystem, we work on doing that. But we're conscious that we need to service what our customers need now, and that's and like I said, we're still a couple of years away from introducing things like cryptocurrency and accepting those types of digital payments. So
we're coming up to the hour and the end of the session. Alexis, amongst us, you or your organisation is the real end user that actually has to do the work at the end of the day. Would you like a last word on what we've been talking about?
Look, I think for corporates like ourselves, I think the quicker we get onto, I guess, a more kind of digital, automated kind of spaces, the better we are. But I think, we're on a journey, and it's not quite black and white that, this technology is there that we can just plug and play and move on. There's all sorts of kind of things that we need to kind of navigate to get that advancement. And don't get me wrong, from a local kind of running a finance team perspective, we absolutely want to cut that work out, whether it's local or in a shared service. We definitely need to advance where we are today.
Okay, look, thanks very much, guys. I'll confirm that Camilla and her team will send out the whole research report and also the video, I think. Camilla, do you want to wrap things up?
Yes, we'll do. So I want to wrap up with a big thank you. Thank you, David, for taking us through that conversation. David, for your contribution. Sal and Alexis. I think this has been really interesting. It's really something we would like to do more of. And we're always talking cutting edge conversation. What is the innovation? What are we doing? But really to make sure that there is no gap of what's actually happening in the industry out there and what we are innovating and creating and taking to market. So I think it's been really, really good to have you here, to Alexis. So thank you very much. And David, Sal and David. And to the audience, you will get the deck, you will get the video, and you will hear from us shortly in an email. And yeah, follow the journey and see what's happening. But for now, we're out of time. So thank you very much and have a lovely afternoon, evening, morning, wherever you are. Thank you.
Thanks, everyone. Bye-bye.
Everyone.
Bye.